All right, what's up guys? This is Bounce Back Bailey, and today we're gonna talk intraday trading, specifically the SPX and SPY indexes. The reason why I'm mentioning both of these is because they tend to follow one another. So price action that happens in one, you'll usually see a variation of it in the other. So this is awesome for both small accounts and large accounts, being that the SPY will cater to more of a smaller account or people that like to move with large positions, and the SPX, more expensive contracts, but the volatility once again pays, especially if you know what you're doing. So we're gonna go into 5 tips to trading the SPX. Tip number 1, price action is king. So before you go into trading the SPX or the SPY, you have to plot the major levels of support and resistance. So we're gonna do that real quick. We're gonna start with a 1-day, 1-year chart and just plot support and resistance anywhere that we see it so far, okay? Now once we've gotten that, don't tweet your top, we're gonna move in a little bit further. So we'll go from that to about 180 4-hour chart. And once again, we're gonna do the same thing. We're just gonna plot any levels of support or resistance that we may be able to find. Moving a little bit closer. So now we'll move to the 10-day, 30-minute. And once again, we wanna do exactly the same thing. Just looking for levels here. All right, next up, we're gonna move into our 5-day, 5-minute, do the same thing. And what you'll notice is as you zoom in, the levels you we're creating tend to be pretty relevant if you're doing it right. Yep, that's pretty good right there. Let's give ourselves one more around this range right here. All right, perfect guys. And now we have our SPX levels plotted. So as we move into sniping, we know exactly where support and resistance may be. Tip number 2, plot your 50-day moving average on your 1-day, 1-minute chart when you're intraday trading. So we're gonna plot that real quick. 50-day moving average on our 1-day, 1-minute chart. And what you'll notice is that the SPX has a beautiful relationship to the 50-day moving average. The buyers love to see it above the 50-day moving average on the 1-minute and tend to ride with momentum if it is. On the flip side, sellers love to see it below the 50-day moving average and will once again move in force when it is below. You can just see here the day before, anytime it was below, sellers came in and really tried to pull it down. Anytime it went above, buyers tried to pull it up, but it didn't really work. So you'll see right here, on the beginning of September 11th, the SPX gapped up above the 50-day moving average. The one thing the SPX always does, it always comes back to it though. So you'll notice, it started to come back to it. Let's see what it did later in the day. You'll notice by 11 a.m. that day, the SPX had actually retraced back to the 50-day moving average. Not only that, but if you look at the history right here, it's very bearish. So, we plotted a channel right here. What would you notice? Looks like a rising wedge, right? And we all know what rising wedges do on bearish formations. They break. And look, just hit under the 50-day moving average, and look what it's about to do on our rising wedge. Let's fast forward a little further and see what happens. $13.33. All right. Fix that. All right, so you'll notice 2 hours later, our rising wedge has actually broken, and you could have ridden this all the way to the downside. And that is the power of your 50-day moving average. Look at it when it's dumping. Never can get back to the 50-day moving average. The sellers are in complete control of this move. All right, and then you'll see at the end of the move, probably around 1:30 or so, look what happened. Look what the buyers did. They got it back over the 50-day moving average. And before you know it, it's off to the races, back to the upside. Pay attention to your 50-day moving average, especially and specifically on the 1-day, 1-minute chart. Tip number 3, follow the levels of retracement. So what do I mean when I say that? Well, let's take a look back at our 9/11 chart right after the rising wedge break. So what you'll notice here is that the first bleed out came and the retracement, AKA the move in the opposite direction, didn't even take back more than 50% of that initial move. On the next dump, you'll notice the same thing. In the SPX, a lot of these come in the form of rising or falling wedges. So play your wedges, and you'll notice that if they are not retracing more than 50%, you're probably okay to stay in that with momentum. If they're starting to retrace more than 50%, it might be a change of story, and you'll see that down here at the bottom. Not only did it retrace and take out the last bearish move, but it also double bottomed, right? So you wanna look out for things like this, your retracement levels, double bottoming, triple topping. These are all indicators that things might be changing in your play, and you need to make considerations for them. Tip number 3, volume tells the story. Now, you might be confused right now because the SPX doesn't show you volume. You're right, but the SPY does. And so, usually when I'm trading the SPX on an intraday basis, I'll use the volume from the SPY to determine if moves are actually happening with momentum or not. So you'll notice at the beginning of the day, 9:30 a.m., 9:30 a.m., right? It looked bullish. But if you look at this 5-minute candlestick, so I watched my SPY on the 5-minute chart, you'll see that this is huge selling pressure. And of course you see what happened. Let's see what time the falling wedge broke. That was at 12:23. So let's see what happened at 12:30, right? Huge selling pressure, right? And that's the market reacting to that pattern playing out in real time. So you want to pay attention to your volume spikes. Look at how low this volume was earlier. And then the second it broke, look how much volume came in and the resulting effect it had on the stock. Volume tells everything. All right, and my 5th and final tip, pay attention to time and sales on the SPY. So what I do is I'll keep my time and sales above 5K. So it's only showing me when orders are coming in above 5,000. And then from there, once again, you're paying attention to key levels of support and resistance, or paying attention to maybe patterns that you've noticed on the chart. And then you're just watching how the time and sales affects the patterns. A lot of times you'll notice that if there's gonna be a bearish move happening, you'll see very, very big orders come in to sell. So let's see if that remains true as we watch what happened on this dump on 9/11.